Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Monday, July 22nd, 2019. Actually, I'll cover, this will be an all-inclusive. We'll keep this one as a subscriber-only update. I'll touch on the broad markets briefly, and then some of the other things that we're watching recently, like the precious metals, commodities, and again, kind of a quick overview on them. Now the big thing here is we have a very heavy earnings calendar this week, particularly on Thursday after the close. So as I've said recently, we are in the thick of earnings season. What that does a couple things, particularly, for example, here Thursday, we're looking at huge earnings coming after the close on Thursday. And what will tend to happen is the market kind of goes into a holding pattern up to that, because you have 1, 2, 3. We have Amazon, Alphabet, both share classes. That's the parent company of Google, Intel, and Starbucks. You have four very big, very important companies. In fact, I just went to the site, QQQ's site, Invesco's parent company, got the latest numbers through yesterday's close or Friday's close, and these four companies alone tally up to 22.3% weighting in the NASDAQ 100. So that is nearly 1/4 of the entire returns from QQQ come from just these four companies alone. So that is a very big earnings day. I'll go over that real quick. So you want to know Amazon is a 10.35% weighting. Both Google's added up, Alphabet classes is 7.97. We'll call that 8%. Intel 2.67, and then Starbucks at 1.3. So the big names, Amazon, Microsoft, Facebook, those are much higher weighted. Apple, of course. But again, I wanted to point that out. So there you have nearly 1/4 of the returns. So you're going to have some volatility, or at least some movement one way or the other. Now, who knows what'll happen? Maybe one cancels itself out. One has a bullish report, two have bearish reports. I just wanted to point that out. And the takeaway from this again is the markets tend to go into a holding pattern before you have some really big market moving news, whether it's economic data, Fed announcement, or a flurry of top weighted components all reporting earnings on the same day. Who wants to take a big position right in front of that? So while anything is possible, I've said that before, we could have some type of other news catalyst move the markets. We'll probably continue to see things grind around like today. And today was QQQ was up, but you had a mixed bag. Small caps closed down today. In the broad market, the S&P 500 was up a quarter point. So we'll get to those in a second. And remember as well, if you are new to the site or even not new, take advantage of the right side of the chart support center. It's under resources right here on the top menu. If you click that, I may change that to the word support or help. And when you come in here, here's the support center. Once you're logged in, you're going to see things a little bit different. This changes. You're not logged in, you're not going to see these account settings, and you won't see this user icon. You click on that user icon, it brings you into your account dashboard, and a lot of the links that are there under that are also here. You can update your credit card, change from your membership level or term if you want to go from a silver to a gold membership or the other way around. That's all there, and we'll explain what happens when you click that link. So there's all that good stuff. And then of course the earnings calendar. That's what I wanted to say right there. You click earnings calendar, it will take you to the I like Earnings Whisper, and you can see, you pick whatever day you want on the calendar here. Click on the day if you want to see who's reporting. Let's see who's reporting tomorrow morning. Coke, Lockheed Martin, Biogen, United Technologies. So again, big week. And you can also search right here in this ticker box up here. At the top of the page, type in the symbol, and that's important during earnings season, or really any time you're trading, because if you're planning to take a position, you want to know if they're about to report. You take a position a day before earnings, you might wake up to a very nasty gap against your position. And I also like to look at a stock and take a look at a chart. Go back a few years. Do you see big gaps? And when you do zero in, are those gaps about 3 months apart? If so, they're probably earnings gaps. A lot of charting programs will allow you to put up markers to show you the earnings date. Point is, some companies do a much better job, almost a perfect job, of managing analyst expectations. Others don't. And then some companies are in industries where there's more volatility, like Intel, for example. Is likely to gap one way or the other. They tend to gap more because semiconductor earnings are more volatile. The industry is rapidly changing. So those are just considerations to make when trading. All right, let's dive into the charts here and look at QQQ. It's really, I guess, decent gain today, but nothing at all has changed technically. To kind of recap what we did on QQQ, we broke this trend line here recently, back tested, put in a divergent high last week, or was that that high was on Monday? Yeah, the 15th. And then we came and we back tested the key 190, 144-ish level. Remember, that was our previous highs right here. And again, that's just roughly, and that's where we came in and we back tested that level. But I pointed out on Friday, we had finally confirmed that bearish PPO crossover right there. We got a bearish crossover on the PPO, which then confirmed, it gave me a check mark on that negative divergence. Until that point, it was potential. And I showed you, if you can't see the lines crossing here, they're still very much crossed. And the other way you can see that is by putting up a histogram on the PPO. And you can see even more so with a 0.8% gain, the PPO is even deeper now into crossover territory, if you will, meaning that the PPO line is even more so. Why? Because the momentum has waned. We had a strong upward momentum. Momentum has shifted. It has turned, and that's what at least this one indicator is telling us now. So that's that. And again, so despite a 0.8% gain, nothing, zero has changed technically. We held that support. We bounced. We were a hair, again, I have to move this line. It's not a hard line. It runs from about right here to right there. So yeah, so remember, we back tested it and we're still above it. The next sell signal on QQQ will be a solid and impulsive break and or close, ideally a close below that level. It might look something like this with a big red candle. And if we don't get that, like I say, support is support until and unless broken. So that's our next sell signal. May happen before Thursday, or Friday's, the trading day on Friday, because remember, all those companies report after the bell, the ones I just highlighted. If it happens before Thursday, I'll tell you this right now, there's a very good chance it could be a whipsaw signal, any close below there, because if those companies collectively, blow it away or have some positive reactions, then that could just put us right back up there. So what I'm trying to say is expect, maybe some whipsaw signals this week. Take everything with a little bit of a grain of salt as far as breakouts go on the indexes and everything else. So that's the daily chart on QQQ. Here's what the 60-minute chart looks like. On Friday, I believe I highlighted the gap support we have right here. There's your gap right there. There's those previous reaction highs on QQQ. We hit it last week. We hit it again today at the lows and bounced. So really, again, nothing much. There was positive divergence on the 60-minute chart. We had equal lows here. Let me get to the futures. I want to show you that. This is what I noticed last night. We had this little, divergent low right there in the futures last night. Prices making a lower low. These are NQ, the NASDAQ 100 E-mini futures, and you can see down on the indicators below there's some positive divergence, which was also, that was the technical catalyst for the bounce today. It's a downtrend line that I have off the highs on both NQ and ES, which I'll get to in a second. So there's the bigger picture. We're still below trend. We broke down and we're moving lower, and so this, that divergent low line that I just showed you and that trend line off the highs is something to watch, because so far that's the early makings of a downtrend. In fact, we could come all the way over here. Prices making a series of lower lows and lower highs. So if we do have another pop this week, you can see resistance here about 79.70. We closed right at resistance today, 79.20. Futures are still trading, but that's resistance there. So I'd expect either a reversal off that level and or up to this downtrend line in that 79.70 level. Get a reversal there. That's going to keep the near term, the very near term downtrend. So here's our intermediate term right here. This is our near term, that downtrend that I just showed you there. Let's take it over to ES. The S&P 500 futures, if I could find it. I have so many charts down here going on. ES, there it is. Same thing. You can see the downtrend line or the uptrend line broken, the wedge, divergent high, breakdown, back test, and we're walking our way lower into what is now a very near-term downtrend right there. And you can see we also had the positive divergence at the lows recently, which were the catalyst for this, and could certainly propel it a little more to the upside. And ideally, the ideal scenario for if you're short right now would be to see this downtrend line contain any bounces, and or right above it is that 3005 level on ES that I talked about before. It's been a pretty good level recently, especially when you zoom in here really close. You had resistance there, resistance. We broke it. Resistance once broken becomes support. Support once broken then becomes resistance, and that's that. So those are the levels to watch. Next target down here, and I do suspect we'll get there. I think this trend is a start of something more, because it's the breakdown of this much larger wedge and the much larger divergent highs. These small divergent lows are dwarfed by the magnitude of the negative divergences leading up to this high right there. All right, let's see. So RTY small cap ETF, or small cap futures, I should say, are down on that 1543 level. I believe that was pointed out last week. So here's your, you can see we're actually been trending down since this high right here back around the first of the month, early July. And there's our downtrend line there, making lower lows, coming up on support. And again, they lagged down today. The small caps were lagging behind and closed red. And if you want to see that on a chart for IWM, I didn't even pull an update. I didn't even look at IWM today. Yeah, but there it is. I believe these levels were highlighted on Friday. 153.69 or so. That is support right there. And we're just kind of closed right on that support level. So that's still, you need a solid break below that level, ideally impulsive 60-minute close. Maybe it happens this week, maybe not, with the big large caps that are reporting. And I'm sure there's some major small caps that are reporting as well, but that's still my next target there, about 150.80. Okay, let's look at a few more items here. Treasury bonds. These are ZB. This is really where I'm focusing right now. We had this uptrend line. We had the negative divergence right there. There's your high, divergent high correction so far. Broke the trend line right there, but this is big support, about 153.068. Hit that support level, and so far we've back tested the trend line here. And you have minor support right here. So if that goes, then you still have that 153.068 level to get taken out if and when that breaks. I suspect it will, but we'll see. That's our next buy signal until it does. Right now, yeah, it's an objective short right here, certainly on the back test. I'll tell you that right now, and we're right about where we back tested earlier. And then that would be your next sell signal, solid break below 153 or so, and take us down to the uptrend line and or price support about 150 or so. Not everybody trades futures, so here's your other option if you want to use an ETF, TLT, the long bond ETF. 60-minute chart here, same thing, breakdown, back test, or near back test so far of the uptrend line. So that almost mirrors the chart on futures, as it should. And there it is on the daily chart right there. So I still don't have the confidence to add this as an official short trade yet. There's just not enough in the charts for me to do that, so I'm passing it along as an unofficial trade. There's a weekly chart, and I did an extensive video on bonds lately, so if you haven't checked that out, you're new to the site or you missed it, just use that ticker symbol tag. Hold on, I'll show you how to get. Okay, again, enter the support center, come down here, search all front page posts, do the drop down, type in TLT like that, real fast, hit enter, and then it'll pull up all the posts that are covering TLT, and here's the video right there, technical analysis of corporate and treasury bonds, and then some other swing trade ideas along the way. All right, next up, that would be Nat Gas. Early this morning in the trading room, I posted a couple charts. Here, where is it? Right here. I'll read more on Nat Gas. I'll get to these charts in a second. So you have this bullish falling wedge pattern right here. 229.50 or so was also price resistance, and I have us coming up here hitting these targets. In fact, I did an updated chart there. Broke out. So first target's about 234, then 238, 239 or so, rounding off. Your stops would obviously depending on which level you're targeting. Let's see where we're at now. So we've moved up a little since then, steadily moving higher. but it still hasn't hit that first target. So there's a called it is an unofficial trade. Oh, and overnight, last night we hit right when they opened. Futures came down and hit that 223.2 2.232 level that I've had is support. Kissed it perfectly and bounced right up to that 295 level. 2295, and so that's where we're at. So that would be my preferred scenario for nat gas. So I'll trade there, unofficial, of course, for now. That is just convictions are pretty good. I'm took a position there long, but I'll pass it along to you guys as an unofficial trade for now. With UGAS or any of the ETNs like UNG, you can trade as a proxy if you don't trade nat gas futures. To update on Bitcoin, my preferred proxy, GBXT, the Bitcoin futures from, I think it was CBOE. There's two. Yeah, these are the ones that trade on the CME. CBOE temporarily suspended. They decided they're not going to roll or open a new contract this last month. They said they may or may not continue them going forward. Last I read, I don't know if anything's changed. So here's the other contracts. BRR. That's the Bitcoin futures that trade on the CME, and yeah, I made that post the other day that it's my belief, and I had quite a few replies to that. People who are bullish and long Bitcoin, and hey, like I said, I may be wrong. I'm not, this is not an official trade, but everything that I could see, not just in the price, but certainly very much in the charts. But as well as just everything that was said and done about Bitcoin, people putting their entire net worth into it, everybody and their brother buying Bitcoin back when the bubble was going on, chasing it at the highs. There's no clear definition of a bubble, so I think it's hard to argue that that was a bubble. I don't think anybody's really arguing that. Where we might differ is I think there's more downside. Once a bubble bursts, I think the rally that we've had so far in 2019, this rally, it was about 300+%. But to me, when you look at the bigger picture, forget about the 300% number. Look at it as I showed you on that chart. I don't have it in front of me, the long-term chart. It appears to be nothing but a typical retracement. Now, when you have a multi-1,000% run from the lows, and that's what it was. So when you have the correction off that, then a kickback rally, 300%. Again, it's all relative to the scope of the initial move, and to support the case that I think that we're going lower from here. Here's the trend line, the best trend line fit I could have, and it comes off not the lows in earlier this year. This is again where we at right here with this chart. That was back in April right there. Here's no, let me hold on one second. Yeah, this is December of 18 right here. This is April right here. The March to April, or late March, early April, where I have this trend line coming up on BRR. And you can see big divergent high, clear divergent high was the catalyst so far for the reversal. There's your negative divergence. And here's a pretty clean trend line, and that's it. So we broke that trend line, and this looks like a kickback rally. Next sell signal on BRR, and again you can track this, and even whether you're trading something else, I'll get to another proxy in a second. 92.34 is that support right there. I think once that goes, it takes us down to at least that 75-65 level. How much is that if we fall from here? Well, that's about another 27% right there from where we are today. And if you don't trade futures or don't want to track those, GBTC, it's my preferred proxy for it. It's similar to an ETF. It's not exactly that. I believe it's a closed-end fund, but for all intents and purposes, it's going to trade like an ETF, and it tracks pretty well. And you can see the same trend line that I showed you on the futures right here off the late March, early April lows. Clean up trend line, clean negative divergence. These charts are pretty clear to me. We broke down recently, but right after the breakdown, we hit that 1242 support. It's a pretty good support level right there, and so that's why we kicked off the support, back tested. So there's your sell signal on GBTC. Either you short on the back test here, or you short on a solid break below 1242, and that would take us down, in my opinion, to about 8, that target there, about 882. How much is that from where we're at now? That would be a 33 or so % drop if it got there. And you can see some other potential targets. These were resistance levels, targets on the upside, and now they're support levels, potential targets on the way down. Gold's still taking a breather. Remember, gold led the way, and as I said, silver would play a game of catch up, which it's done and has been doing recently. That today, again, gold was down, but yet silver was up. Somebody asked me in the trading room, hey, it's a great question. Why is gold down? GDX is up today, and I said, well, a couple reasons. Number one, although gold will follow, GDX will follow gold. Look at the larger trends from day to day. Occasionally, you have one up, one down on any given day. That's common with any two securities that are correlated together. They might have a correlation over time, weeks, months, especially years, but any given day. And then more importantly, also I said that most, if not all, I'm not sure if it's all of them, but I know a good number of the components of GDX. GDX is the gold mining ETF. Here, let's get to that. A good number of those stocks also mine silver. They're silver and gold miners. They're not just pure gold plays or gold mining stocks. They're, a lot of them, if you're going to dig in the ground, you can come across a lot of places silver and gold run together, and so you see the silver, you're going to take that out of the ground too. And again, that's what I know a lot of these companies do. So therefore, that's why you had gold down today. GDX was up 0.75%, and there's gold down. And where I'm going with that, gold made a little recovery at the end. It was down more earlier, but then silver was up today. Pretty nicely, and that's why, in my opinion, why GDX was up. So remember, even though it's called the gold mining ETF, and even though silver has its own silver miners ETF, there's a lot of overlap with both of these companies, or the miners, where many of those will pull both gold and silver or whatever other precious metals are coming out of the ground with it, palladium, platinum. There's a divergent high in the silver miners ETF right there. Potential, it's unconfirmed. As I said, sometimes in these strong runs you can burn through these divergences, but it's kind of a heads up. And on Friday's update, I told you that that 1530 area, it's a pretty big level for silver. We overshot it with a momentum-fueled overshoot. It was kind of to be expected. You had a vertical rally, an almost straight-up rally. You're not going to stop, even if 1530 or so, 1527 contains this run followed by a consolidation or a pullback. It is almost to be expected you're going to overshoot it when you have that much momentum heading into that level. And so you can see we did on Friday. We overshot it and then came right back down, and we closed right around there. We closed at 1535 today. So for all intents and purposes, silver is still at resistance. But again, that near term, either we consolidate a little more, maybe that's enough, maybe we pull back. I've given you some pullback targets already. I'll even add one right now. There's a big gap right there and some price resistance. But longer term, the breakout looks great. And I've covered this in enough videos lately and other posts that I'm not going to spend a lot more time on that right now. But I did want to go back to the futures on GC, and I showed you, we have a series of trend lines here, but kind of watching this trend line now, and you can see that we also have a divergent high. We did not have a divergent high right here in gold because gold didn't make a higher high. It made a lower high. So right now we've made a higher high with the indicators making lower highs. That's negative divergence. That says, hey, gold may need to consolidate a little bit more. Maybe, maybe not. I've seen it burn through, but where I'm going with this is I'm lukewarm. Near term, I am neutral to slightly bearish, but I don't have a desire to short right now. I did a quick tactical short trade on silver on Friday, right as I was doing that video Friday morning. But that was quick, hit my target, got out. I don't care to swing short gold or silver. I'd rather watch them correct, wait for the next buying op, the next objective entry, than to try to get cute and game a pullback when the momentum has been so strong lately, and with everything, especially that volume in silver. So there's the gold futures. Let's find silver futures for you. Again, this was the daily chart of silver futures that I posted. We had two almost perfect equal highs there at about 16,475. Again, we overshot it on Friday with what I call momentum fueled overshoot, and so far we're below that level. And the futures are more important to me than the ETF. So there's silver with a failed breakout attempt to resistance, very overbought. RSI is up above 80, and so it would be healthy to see it work off those overbought conditions, at least maybe for a little bit long, couple more days, and then build up the energy to break on through there, not being so overbought, and start the next leg up. So that's what it looks like on the daily chart. And I also have a 60-minute chart here. and that's it. So this was the one I was doing the video last week. We were right here, and yeah, that's where I reversed, and then silver, boom, fell, broke the trend line, the price channel right there, 60-minute channel, big red candle, and we've had a little kickback rally so far, but it, like I said, volumes, it's thinning out. This is just consolidation. It's healthy. Maybe we go down a little more. You can see my levels. Maybe that's enough, and then we power on up. I don't know. Like I said, I can just tell you that intermediate to longer term, I remain bullish. Near term, so maybe if you don't have a position, you missed that run already, you want to start scaling in. That's not a bad idea. You buy a little today, a little tomorrow, little later this week, maybe a little next week. And so if it keeps going down, you're buying at lower prices, and if it keeps consolidating and breaks out, at least you're scaling in. And if it just takes on up from here, you're also buying in. You're not going to miss the boat, because what this could be, this move in silver, is what I like to call the leave you behind rally. Sometimes the metals and other commodities, I've seen it happen in coffee and other things, can do that. Back in 2016 we had a leave you behind rally, meaning if you didn't get in, that it left you behind, and it just kept running and running and running. Gold actually is probably a better example of that, and GDX actually is a great example of that. So let's look at that. There's GDX. There's the leave you behind rally. If you didn't take the breakout, it was pointed out at the time, as was a divergent low. If you didn't take the breakout, it didn't give you a chance to get back in. Way after it had this huge run all the way up here, about 113% run in GDX. It had a little pullback. You might have gotten in there, but more than half, the bulk of the gains were already in at that point. So that's what I call a leave you behind rally. This one could be as well, and so that's why if you've got positions, great. You can micromanage, add to those, hold on to them. But as of now, the trend is still up. Here's the trend line in GDX, not yet broken. And more importantly, we just broke out above resistance at 2560-ish level too. And weekly chart, I've already covered this quite a bit recently. We've cleared that resistance zone after a little consolidation there, and so my next swing target is about 3152 on GDX. And I wanted to talk about wheat. Somebody asked when I was still bullish in the trading room, and actually their timing was perfect because wheat had just broken down. Remember, this one stopped trading for the day, so it's not trading right now. It'll pick up again tonight, but I believe trading's over. 492, that was support right there. 492 is the support level I've been watching. And the fact that we broke below it, that is bearish. You have to take a breakdown for what it is on face value. So the fact we broke support, it makes it no longer objective. I had said add to, but not below 492. However, what it did, and I said I'll keep a close eye on this one, the divergences that were in place, we had bullish or positive divergence at that recent low down to 492. Those divergences have simply been extended, and they're not anywhere close to being taken out. Even if we go a little lower, the divergence lines could be dragged down a little. You'll still have bullish divergence, just like you had positive divergence here at that low, here, which went all the way up there, and you had negative divergence at the highs. So like I say, these things don't always work for a trend reversal, but more often than not. So what I expect to happen now, it hasn't happened yet, so to take a position right now would be speculative, because that's a breakdown. I mean, technically you want to be shorting. I wouldn't short a breakdown like that with positive divergence, just like I don't take long side breakouts that occur with negative divergence. But I will watch for a reversal there and a recovery of that level, because as I often say, fewer things in trading and investing are more bullish than a failed breakdown of a stock. So what happens is when you break down, shorts pile in, longs capitulate, the weak-handed longs. You have two, separate our, long or holders of a security by strong-handed and weak-handed. Strong-handed, are not going to give it up. Like there's some out, you listen to my voice that had Bitcoin and have written the whole thing down from the top. And if you are still in it and you were at the lows this year after the 300% rally we just had, nothing's going to shake you out of Bitcoin. You'll probably die with those shares. But so those are strong hands that are going to, they're not going to get shaken out by a little move. I'm kind of using an extreme example with Bitcoin, but weak hands are the ones that are quick to, sell it. So if you were already had your reservations about wheat, let's say you bought it wherever you bought it, whether you bought it here and you wish you took profits there, or you got in towards the top, now you broke support. So what a breakdown like that will do is it flushes out those weak hands, so then you have a different set of holders of the security, those that are unlikely to sell, and you also have some shorts that might have jumped in. So if, and it's a big if you can reverse, pop above there, and especially that 500 0.688 level, then that could trigger a short squeeze, and it could be quite bullish. At that point, I might add wheat on as an official trade once again. We had it earlier this year. I've been highlighting it recently as an unofficial trade because my convictions weren't super high, but WEAT is the ETN for wheat, and that's it. So last time it was an official trade, we closed out here at the final target, and so I'll watch it again for another entry. One other thing to note is that PPO signal line, the 9 EMA right here, the white line, is coming to backtest the zero line from above. When it is below the zero line, like it crossed below here and remained below that whole time right here, the trend is bearish. There's a bearish trend. It says that's, and when it crosses above, the trend is bullish. And so often that line will act as support. And again, I use the 9 EMA because it's the last of the two to cross, and that helps filter out whipsaw signals by using the PPO line, which is the first to cross. So that's another consideration. So we'll watch this one. Coffee, ditto. Well, no, I should say coffee's still holding above 105.34 support. It's consolidating. I'll say this: the longer it consolidates, it is above support. So technically, it's still bullish as long as it holds above that 105 support. But I don't like, the longer it consolidates, the less I like it, because coffee, usually when you have a breakout like this, it starts to trend, and it's a pretty strong trender, and you get these corrections and then the next leg up, correction, next leg up. So far this has been a pretty prolonged consolidation period, and I would much prefer to see it continue up soon. But with that being said, it's still an official trade and long-term trade, and you just want to watch a break below that level. Anything more than a brief break, like we just had in wheat. Here's a good example. There was a false breakdown there, snapped back up very strong the following day. But the fact they couldn't follow through with this, that concerns me a little bit, because there was your false breakdown. You had a divergent low. Everything was in the charts at that point, right there, to take it and run. And they didn't. The onus was on the bulls to continue to carry that one up. They couldn't follow through. That's why I'm a little less keen on coffee right now than I was back here. But with that being said, support is still support unless broken, and so the potential is there. I'll wrap it up with crude. I wasn't going to cover it, but I'm sure I'll get questions. Near-term neutral. I don't have a strong opinion. As you know, there's a whole lot going on right now in with Iran, that whole situation with the UK ship that they took, and everything else. That should be bullish for oil, but it's not so far. But I just wanted to update this chart. I don't have much of an opinion, and I certainly don't have a position right now. It was an objective long here at that recent divergent low. You can see right there. We fell down to that 54.77 support, but now we're kind of in no man's land. And again, if I see anything that stands out, I'll certainly post a chart update tomorrow or later this week. But as of now, I'd rather just stand aside and let the dust settle. We had a nice move. It was an unofficial short trade last Friday, not the Friday that just passed, the Friday before. At the same time, I added that short on natural gas, and it played out beautifully. But so we've milked that run. Or at least some of you did, and at this point in time, like I said, stand aside, let the dust settle, let the charts set up for the next objective high probability entry, and I just don't see that right now. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.